for EY across the whole of Europe as well as UK. We use the word building trust, and that's basically the assurance brand that we basically have. So in case you must be hearing a lot in the market about the word audit, and I'm sure a lot of firms do use that. I think I'll try my best to demystify that, because audit doesn't necessarily mean audit. It often gets used in a very loose term as well. But I think today, thank you very much for inviting me as well. I think following through with the passion that was outlined as part of the Scotland program, Blockchain Scotland, I think the idea is to make sure that we can help, we can educate the industry, right? So, and that's the reason why we just want to talk about tokenization, because for us as a firm, what we often believed in was the technology. And what we often like to do is differentiate ourselves from the fact that people talk about crypto. That's one aspect of it, but really the use case is all about using the tech to enable and changing the market infrastructure. So before I really deep dive into tokenization, etc., I just want to gauge from the room in terms of, I suppose everyone knows what tokenization is. So if I could just get a raise of hand in terms of who understand what tokenization is. And if people don't, that's completely fine. So I'll probably not go into 101 of tokenization. That's the most important thing for me here. But just generally talking about the fact that, you know, in this ecosystem, as I was just making my way back to this, sorry, not way back, but more coming here, there was an article that came out at CoinDesk. It's all, again, public information, of the fact that various industry bodies have basically told or helped the government to say, let's work towards tokenization. And when we say tokenization, tokenization of what? It can be anything. Funds, money, deposits, you name it. And for those who don't know, I think I'll just lay out the very bare basics of how that can help you, which is all about making sure that in a generation where everything's almost 24/7, we want to make sure that we can work towards that, right? So I'll give you an example. So if I'm transferring money at the moment from my account to someone, I want to see it move very quickly. But equally, if I'm trying to buy something like almost like a fund or a real estate, do you think it should take about 2 months or a few days for it to be enabled? Probably not, right? And that's what this technology can help you make sure that you can move forward in a very real-time atomic settlement 24/7, so you don't have to worry about, you know, oh my God, I have to wait for the weekend to finish before I can get access to certain things. So I think if I build a story just on that, right? I'm conscious that some of you who are lucky enough to actually go through a mortgage process, of how tedious the process is, right? Do you think it can be done in days? Probably not, right? How long does it take? Weeks, if not months. And if you're transferring money from your account, you're transferring money to someone like a solicitor that you think is a solicitor, and that solicitor will then transfer that money to someone who is also perhaps a solicitor before it actually goes to the core bank or the person that it's supposed to go to, whoever that is, right? So you can appreciate that the whole process is quite tedious, and therefore the concept of tokenization coming in, which can really make life a lot more simpler by having that level of transparency, because you'll have one platform that everyone can see and access to, but equally build that trust in the ecosystem. So just on tokenization, general benefits, appreciating the concept, but what does that mean for UK? In case you're not aware of it, there is a report that came out back in November, and as of last week there was another report that came out from the same organization, the Investment Association, where they've clearly laid out a roadmap of how things can happen from a UK perspective. And the reason why I was alluding to the article just before is because a framework has been provided in how to move forward, right? Which includes custody, which includes how you work on from the platform perspective, from an issuance point of view, and so on and so forth. So on the assumption that you're going through a journey be it digital assets, be it tokenization, I think what we wanted to do was just briefly talk about how do you build that trust in your ecosystem. Okay? And in case you have any questions, please do ask, because I think the whole point of us being here is to make sure that we can address your concerns, questions, so that we can see you progress going forward as well. So we've got this framework, which is all about appreciating risks, right? So as you embark the journey on tokenization or into a digital assets ecosystem, I think the thing that you have to bear in mind is the risk framework has been in existence since ages, right? It's nothing new. It's not to say that banks or other firms, be it not banks or institutions, have not faced or seen. Okay? So what we will often say is the things that matter at the back of blockchain, or the fact that you're talking about digital assets, are the unique risks that come with it. And I think the element of recognizing those points is crucial. Because if you don't, then that's where you fall into the trap. That's basically where you fall into the crust of frauds that are happening, or issues that firms face towards liquidations. There again, that you must have heard in the public news that came out last year and the year before. So what we've called out over here when it comes to digital assets challenges, like for example, the anonymity that comes with it. And the key thing over here, for example, is how do you know that I'm transacting with someone who's sitting right next to me, right? Those are the things that become important to note, because you want to make sure you can appreciate who you're working with. Pace of change, it's basically quite fast, it's 24/7. Decentralized infrastructure, what does that mean? It basically implies the fact that no one person is responsible, and therefore recognizing that in case things fall apart, who do you go out to fix things, right? So I think what we're just trying to allude over here is that there are challenges which are unique to blockchain, and recognizing them becomes quite important. So when we look at the risk framework that exists in the market, which you guys may or may not be familiar with, we've just called out a few things in bold, which are quite unique, right? And therefore becomes important that within your ecosystem that you're working on, that you can focus on them as well. Hopefully I'm resonating with people when it comes to risk, but I'm just going to pause, because what I don't want to do is just keep on talking without you guys digesting, or for that matter clarifying. So any questions so far? No? Straightforward? So just on that note, how do you assure things in the market when it comes to blockchain? And this is the most important thing to bear in mind. So when someone says, I've been audited, I'm not really sure that you've been audited, right? Because what does audit mean, right? It's based on certain standards. So the way assurance works is that there are different forms of assurance. One is reasonable, and when someone says I've been audited, they usually imply a financial statement audit or an external audit, right? So when banks make lovely announcements and say, I'm putting my results out, basically they've gone through a process of audit, and therefore they're making the announcement. So financial statement audit is one of the first ones, but it's basically looking at your finance, your numbers predominantly. And underneath it, we also look at system and controls. So the things that really help are system, organization, controls report, which is basically looking at your system. So for example, if you have a platform and you want to know how good or bad that is, you can go through a process of providing a software rating. What does that mean? So imagine I'm a platform and I have about 25 to 30 financial institution or funds or brokers, and they're all saying, we want to know how good you are from a security perspective, right? So do I cater for all 25 or 50 of them? Yes, you can. Or you can perhaps look at this report that gets distributed in the form of assurance to your respective stakeholders. Equally, regulatory audits need to be conducted in different form or shapes from a jurisdiction perspective. But let me come on to limited assurance or agreed upon procedures. So everyone loves the concept of smart contract audit, right? A lot of firms actually say that they actually do. But if you actually look in the opinion, it's not really audit. When you look at the report, it's not really audit. It's something like limited assurance that has been provided, or it's just a set of agreed upon procedures that you and I will say, I'm going to do 5 or 6 things or 10 or 7 things, and that's basically it. So hence why just on that slide, I think what we're trying to imply here is highest or higher level of assurance being provided in the form of reasonable assurance, and trickling down to limited, which is a negative form of assurance, towards literally no assurance, but just set of procedures being performed when we say agreed upon procedures or AU. Hopefully that makes sense.
Yeah.
But now you'll say, what's the link to all of this, right? So the link is, once you can establish yourself with the right risk and controls and do all the boring stuff, as someone would say, then you work towards making sure that you can do all the form of assurance internally or externally, right? So hence why that acknowledgement becomes necessary, because as you move forward in this industry, you'll probably be looking at firms to provide you with that level of trust. So it starts with the journey at home, and then you work your way towards providing assurance to your third party or your stakeholders. So a very short talk today, covering just a bit on tokenization, on the fact that it's really making a difference in the market. But I think the key message here is in-house and making sure you do the right thing, because at the end of the day, whatever you guys do will help build trust in the market. So that's what we encourage, doing the right thing. And if you need some form of assurance, then you can certainly get them through third parties. So I'm going to pause again. Any questions?
You make
Yes, go for it.
Yeah, so you made reference to the whole smart contract auditing process. Obviously, I'm quite familiar with firms like Certic who offer some level of assurance, quote unquote, but it probably falls under the limited assurance bracket looking at things now. Could you give us maybe a few examples of third-party firms that would be, I suppose, providing that reasonable level of assurance?
So reasonable level of assurance comes under certain standards, and there is no specific standard for a smart contract. Very simple way, because if you look at what the auditing bodies have provided as a form of view of what needs to happen, it's quite elaborate, and smart contract is just one component of it, if you think of it, right?
Right.
So can you do a code review? You can, right? Can you do vulnerability checks on it? Yes, you can, but that doesn't fall under the auditing standards that have been set by the respective bodies, right? Hence why that reasonable level of assurance is quite high as a bar, because you really get into the weeds of it. But also tell me, from a risk perspective, let me flip it. If I'm the one issuing that reasonable assurance and something goes wrong, then what's the chances of the individual or the firm being sued? Pretty quickly, right? So why would you give that level of assurance knowing the fact that that risk is quite high compared to a financial statement audit, for example, reasonable assurance, where things are very prescribed. These are the things that you need to do and adhere, and you look at things from a materiality point of view, for example. So materiality, what does that mean? It means, and what does reasonable mean? It doesn't mean absolute. It doesn't mean 100% sure everything's fine. You look at things holistically, and you look at things which matter most, to therefore say it's looking reasonable that nothing's wrong, right? Whereas in a smart contract, something goes wrong, it literally flips, and you can lose all of your assets, right? So providing that level of assurance at the reasonable level is quite high and it's quite risky. So hence why in all of those firms, no one has actually done that. Yes?
So in terms of a new technology firm, so then going to throw up a new technology in the market, in terms of regulatory aspect, they have to comply with certain regulations, right? So when you talk about assurance, so you also ensure that this complying with the regulatory aspect of it, or it's only from the technology side?
So, from a technology side, looking at regulatory audits. I didn't understand technology side, but so if you could elaborate that.
So for the case of SCA, so they have certain regulation in terms of crypto assets.
Yes.
So if a firm is coming up with a new technology in the crypto space, so when you do the assurance, you ensure that this is complying with the regulatory aspect of it or from the technology side of it?
Okay, good question. It's basically both, and I'll explain that. So regulatory are outlined by the regulator, and they'll say, for example, they'll say you need to segregate client money or digital assets from yours to the client. Simple, right? It didn't tell you from a tech perspective how you're going to do that, right? But within your regulatory audit, you would have to demonstrate how you've done it through tech or manually, whatever that is. And someone independent will come and check it. Now, if your platform's pretty big, pretty good, you may want to focus on, for example, Service Organization Controls Report, which is the second one in reasonable assurance. So you've done that level of technology review that will enable someone to say, I can also provide you comfort that the regulatory audit is also fine and I'm complying with regulations too. So that can work hand in hand, and which is what often larger firms basically focus on. But if it's a smaller firm, and that's absolutely fine, or mid-tier, you may not want to do it because there is no demand from a SOC report point of view. So you just focus on the automated controls or procedures that you have that can enable you to meet the regulatory requirements, and that leads to the regulatory audit that is being conducted. So currently FCA, so let's talk about FCA. Currently, I think your firm may be under VASP registration, right? So that's VASP registration under Money Laundering Directive, right? And you have to report certain things, but not like a typical custodian that has to report to the regulator to say, you know, I have got really solid controls in place to make sure that client assets are being kept separate to my own, and there's a whole framework behind that, right? But I think FCA has made certain announcements. Hopefully we'll see that change to come through in the very near future.
Could you talk about the difference between audit and attestation?
Yeah. Difference between audit and attestation. So when we say audit, I think one has to bear in mind what audit, right? And they basically said, I need to be independently audited. I said, what does that mean? You know, which one? Do you want IT? Do you want financial statement, regulation? Which aspect? Or do you actually even need it? So we really went into the weeds of it to figure out that, you know, they didn't even need an audit. I got a request saying I need to check my, sorry, can you conduct a reputation risk audit? I was like, what does, sorry, audit? So do you want me to review your work? And they said, yes, review my work. So I said, that's not audit. So you want me to review your work? So if you say audit, I would basically look at the first one and say financial statement audit, right? That's the difference. Attestation can mean that I'm opining on certain things which could come under your limited assurance being provided. So limited assurance, what does that mean? And what does reasonable assurance mean over here? Limited assurance basically says nothing has come to my attention that something's wrong, right? Something could be wrong, but nothing's come to my attention. But when it comes to reasonableness, I've actually looked at a lot more things, looked at things which are material, like some big items, to say, you know what, in my opinion, things look reasonable that, you know, nothing's wrong. So if you see my statement, it's very different, and that's the subtle difference between what a reasonable assurance is versus limited assurance / attestation.
So audit is more absolute, attestation is
Nothing's
red
absolute.
flags.
Sorry?
So attestation is where I'm not saying red flags, and audit is more in depth.
Audit is more in-depth, and attestation is restricted with almost like limited assurance to almost no assurance.
Yes.
What see it going. As we move to Web3 applications where there's trust at scale using distributed ledger technology, do you still see a need for this assurance, or will that be automated within the Web3 application?
Yeah. So currently we are still seeing a major demand for it, because at the end of the day, who has checked the work? You know, who has seen things under the hood? Let's take an example of smart contract. How do you know that the vulnerabilities don't exist? You know, I'll give you an example of SocGen that provided a, I think a stablecoin issuance happened. I think I could be wrong, but they put out a smart contract which was public, and people ripped it apart in 5 minutes. So do you need to make sure that you've checked it and someone has independently looked at it in a lot more detail to get that level of assurance to your stakeholders before you look at issuance in the Web3 space? You know, that's a very important question to your stakeholders that one should ask. A lot of firms basically said, you know what, I've got this covered, I'm completely cool, no need to do it. And then you have instances like that, you know, and that basically prompts more and more that one basically needs to provide that level of assurance which is needed to build that level of trust. But you know, trust is not just by looking at third party, it's also doing the right thing from get-go, right? And that was my first note right at the start, that you build your house in order from a risk management point of view, you know? And once you do that, then you move to the next stage of, you know, building that level of trust or assurance that's needed. But in this Web3 space, absolutely, there is still a need. Yes, things can be seen publicly, like on-chain. So one will argue and say, all of the transactions on blockchain, why do I need to verify it, right? Someone can say that very easily, and we get to hear that a lot. But the question is, not that the information is on-chain, what information do you have, right? And is that reconciling with information on the chain? A lot of times it's not. Like, then who's looked at that under the hood to say that everything's fine? And that's where the assurance kicks in.